Good morning and welcome to the ADS Securities Markets Update. We'll start our video today with a look at the major developments from China. During the US session yesterday, the People's Bank of China has injected 500 billion yuan, which is equivalent to $81 billion, into the nation's largest bank. The move clearly shows that China's slowing down is worrying. The move also is seen positive, that the bank is ready to act when needed. However, at the same time, it is worrying how the bank intervened so strongly. Following the announcement, the global equities soared again, even during the Asian session, and the US dollar tanked across the board. Oil prices also advanced, while the Chinese stimulus saved gold from breaking below 1230, leading the prices to recover above 1240 again. During the Asian session today, there was only one economic release from New Zealand, while the markets showed some stabilization after the Chinese shock, and as all eyes are headed toward the FOMC decision later today. In New Zealand, the current account posted a deficit of 1.07 billion in the second quarter of this year, after posting a surplus of 1.47 billion in the first quarter of this year, while the estimates were to post a deficit of 1.04 billion only. Going forward to the European session today, there are a collection of economic releases and events from the UK and the Eurozone which may have a notable impact on the markets. However, the impact could be short-lived, as the major concentration will be the FOMC decision later today. In the UK, the jobs report will be released at 8:30 GMT time this morning. The main focus will be on the wages growth. The average earning index is expected to rise by 0.5% in July, after declining by 0.2% in June for the first time since 2009. The average earnings index, excluding bonuses, is also expected to rise by 0.7% in July, compared to a rise of 0.6% in June. The unemployment rate is expected to tick down or to tick lower towards 6.3% in July, and down from 6.4% in June, which would be the lowest unemployment rate since February of 2009. The claimant count change may decline by 29.7 thousand in July, comparing to another decline of 303.6 thousand, which would be the slowest decline in 3 months. At the same time of the jobs report announcement, the MPC meeting minutes will be released. The votes are expected to remain stable. The asset purchases facilities votes are likely to remain unchanged at 9 votes in favor to keep it on hold, and the official bank rate votes may show that 2 members are favoring a rate hike, while the remaining 7 members will vote for stable rates. Finally, in the Eurozone, the final CPI and core CPI set to remain unrevised at 0.1% and 0.9% respectively. As for the US session today, also a collection of economic figures and events will be released today, which is likely to have the biggest impact on the markets today. Beginning with the inflation figures, the CPI is expected to rise by 0.1%, while the core CPI may rise by 0.2% in the month of August. The US current account deficit may widen further to 114 billion in the second quarter of this year, comparing to a deficit of 111 billion in the first quarter, which would be the biggest deficit since the third quarter of 2012. The NAHB housing market index set to rise to 56 in September, up from 55 in August, which would be the third monthly expansion above the 50 key level since January of this year. After all these figures, the market's concentration will be shifted toward the Federal Reserve, and the market may stabilize and likely to trade within a tight range ahead of the decision. The FOMC statement and the economic projections will be released at 18 GMT time. The Fed is likely to taper the QE by another $10 billion, which makes the QE or the stimulus package at $15 billion, down from $25 billion. However, the Fed may cut the growth projections again. The most important event will be the FOMC press conference, which will be held at 16:30 GMT time. The markets will be waiting for more remarks by Janet Yellen regarding the first interest rate hike. Meanwhile, and after the disappointing jobs report for the month of August, in addition to the falling employment components in many sectors in the US, Janet Yellen is likely to avoid mentioning anything about the first rate hike for some time, and may return back to the well-known sentence, which is to keep the interest rates lower for a considerable time. This is it for today. Stay tuned, as we will be publishing our special report on the FOMC meeting minutes later today during the US session, to discuss the expected scenarios and how the market will react to this decision. This is it for today. You can follow us on our social media sites, Twitter, Facebook, and YouTube, to get the latest economic releases, reports, and analysis. Thank you for watching.